Welcome back to Alpha Recap. Markets closed for the day, and we're unpacking what moved stocks, why it mattered, and what to watch next. As always, if you have questions, you can reach us at stockalpha.ai and use the Q&A feature to ask directly.
Great to be here. What really stands out here is the narrow nature of today's rally. Big indexes ticked up, but small caps actually slipped.
Exactly. The S&P finished up about 0.25%. The Nasdaq 100 was up just under 0.4%, and the small cap Russell closed down about 0.5%. That split tells you the market was selective today.
Right. I mean, when you step back and look at this, it felt like large caps and tech were where money wanted to sit, while smaller and more speculative names got ignored. Company-specific news and sectors tied to policy or projects did a lot of the heavy lifting.
On the Y, earnings and big corporate catalysts concentrated returns into large cap tech names. Utilities and parts of real estate look strong on project and financing headlines. Smaller caps, though, are more sensitive to funding and headline risk, so they lagged.
I mean, when you step back and look at this, companies with steady cash flows and visible earnings just felt safer today.
Right.
Let's dig into sector action. Utilities were a clear standout. People are talking grid upgrades, electrification, and electric vehicles, and that pushed utilities higher as project pipelines looked healthier. Real estate also had a nice day, especially REITs that have clear refinancing visibility.
Yeah, and energy and materials saw some momentum too. Contractors and miners picked up on project activity and stronger demand for industrial inputs. At the same time, communications and media were mixed. Content winners showed strength, while ad-dependent names felt the pinch.
Right. And the other thing is industrials got a lift from AI infrastructure chatter, data center demand, servers, automation-related equipment. So it wasn't just old school cyclicals doing the work.
Short react.
On tech specifically, the Nasdaq's small edge shows big tech still being the preferred place for risk. But internals were uneven. Semiconductors and hardware reacted to supply chain and product news rather than broad demand strength.
Short reaction.
Okay, big single name headlines now. Dell absolutely stole the show. The stock jumped roughly 32% after reports and company comments pointing to a big re-rating tied to servers and enterprise software. That was huge and forced some funds to rebalance.
Honestly, I was a bit surprised by this one.
SentinelOne was the other marquee mover, but in the opposite direction. The cybersecurity firm cut guidance and trimmed headcount, and the stock plunged. Various notes showed moves in the neighborhood of 6 to 12% during the day. That kind of news put pressure on security peers and made investors reassess growth durability in that space.
Wow.
A few other names worth calling out. AbbVie was up about 3.5% after positive clinical read-throughs. Coinbase gained amid renewed institutional interest in crypto, although banks pushed back in public comments, which keeps the narrative volatile. Meanwhile, denim and apparel names like Gap and American Eagle got crushed on weak sales and inventory worries.
Right, and the Apple and Qualcomm chatter mattered too. Any suggestion Apple might move modem design in-house creates ripple effects across suppliers and chip makers. It's a reminder that product-level shifts can move entire supply chains.
On the macro front, there wasn't a Fed decision today, but the tape showed sensitivity to Fed messaging and upcoming data. Traders are watching inflation prints and payrolls closely because those numbers will push the odds on policy easing or staying restrictive.
So what really stands out here is that the mild risk-on in big names alongside small-cap weakness suggests people expect a steady policy backdrop for now. Enough restriction to keep broad risk appetite contained.
Technically, indexes like the S&P and Nasdaq stayed above near-term moving averages, which is positive. But the lack of breadth and the Russell weakness means momentum indicators don't confirm a broad risk-on breakout. Positioning-wise, active managers seemed selectively long quality growth and defensive infrastructure, while avoiding small caps and discretionary cyclicals. Options flow around Dell and SentinelOne looked like idiosyncratic hedging.
Yeah, that tracks.
Quick checklist of what to watch next session. 1. Upcoming inflation and payroll data. Big market movers if they surprise. 2. Follow through from Dell's catalyst and any guidance lift or hits from cybersecurity peers. 3. Whether utilities and real estate can keep their leadership or if small caps finally find footing. 4. Any major comments from banks or regulators on crypto that would swing sentiment for Coinbase and related names. And 5. Whether technical levels on S&P and NASDAQ hold or break.
I mean, when you step back and look at this, the bottom line is today was a selective advance. Large cap franchises and defensive, policy-linked sectors got bids, while broad participation was missing. Company-specific shocks like Dell and SentinelOne made the headlines. And until we see more consistent breadth, expect headlines and macro data to be the main drivers.
Short reaction.
A few clear takeaways. 1. The market was tentatively constructive, but selective. 2. Big corporate catalysts can still dominate daily returns. 3. Small cap weakness signals caution on broader risk appetite. And 4. Macro prints and Fed commentary remain the biggest potential game changers in the near term.
Quick reminder, this discussion is for informational purposes only. We're not offering personalized investment advice or recommending the purchase or sale of any security. Analysts note market trends and data, but this is not individual guidance.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. Catch you next time.